Welcome to the Hard Money Show, where we talk about real estate, home loans, and media. It is a good day when we can get Aaron on the line from Capital Direct Lending. Man, thank you for being here today.
Absolutely. Thanks for having me.
Dude, what is your story? Because here's the deal. I don't meet very many people that have their real estate license and their lending license. Now, keep in mind, guys, we got connected through what I think is some sort of automated texting system you might have in place or something. I'm not really sure, but you were sending me stuff. I got something last year. I got something again this year. And I was like, this guy's out here. He's putting in the work. He's following up with people. And I thought this is a great opportunity. We haven't had anybody on that's on the lending side. Just for a little bit of background for you guys, he has been in the business since 2016. Is that right?
Yeah. Yep.
2016, over 400 transactions. I'm looking over here at this this beautiful portfolio you have here of all of your accomplishments and your license. And I was like, man, I need to make one of these. This is super nice. But you're clearly well versed in what you do. And so, and you have some unique products that you guys are putting out. So I'm excited to kind of jump into that. But before we do, man, what's your story? How did you get into this?
Yeah. So I started in 2016. I was, before that I was just working at a job at Best Buy. So I was in sales in the past and, wanted to get into something better, more lucrative. And so I started working towards getting my real estate license.
Were you not bringing in all the money working at Best Buy?
No, not enough. Definitely not enough.
I had a couple of buddies that worked at Best Buy, and I think you guys there was some sort of compensation base there, right, for sales?
Not really. You get bonuses based on like store goals, but it's not like commission based or anything.
Oh, okay. So you're not becoming a millionaire there.
Yeah.
Okay.
Exactly.
All right.
And I had my aunt was in real estate, and it'd been something I'd tried to do previous years, and I did the online thing, and I got all the books, and I didn't even do anything with it. And then maybe a year or two later, I was like, okay, I really want to do this. So I did it again, and I actually went a different route. I went to Sierra College, and I took all my classes actually in school at Sierra College. And then when I got the classes done, then I went and took the exam. And so that's when I got licensed in 2016.
I've had one other person who's been on, but she's been in the industry for over 20 years. So I didn't realize that people were still getting education through the universities, that was still a thing.
Yeah, I guess it's something that I just needed, you know what I mean? So if anybody is trying to get their license out there, it's definitely a way to go if that's something that you want to do.
Yeah, I kind of feel like that sometimes too. I mean, granted, I didn't go that way with, this, and there's other things that I've done where I didn't go that path. But, my undergrad, my master's definitely went that way. And now I'm really interested in learning a couple foreign languages. And I find I'm really like kind of getting back to that point where I'm like, oh man, I don't know if I'm going to be able to do this unless I'm in a classroom.
I took Spanish and at Sierra too. That's actually the only classes I ever took was Spanish and real estate. My wife's Latina, so and her mother-in-law lives with us, so I had to learn some Spanish myself.
Yeah, you got to do that. No, that's funny. I know my wife is she's Punjabi, and so I want to learn the language, and I want to learn Spanish as well. I mean, I took Spanish in high school and a little in college and American Sign Language, and I've always loved German as well. But and it's just funny because I never, like, I always thought, oh, I can learn, I'll like use Duolingo or I'll use whatever. But it's just like something about learning a foreign language just to me is going to be easier in a classroom. Do you think that's what it was for you, like to do the real estate portion?
For real estate?
Yeah.
Yeah, for me, that's why I did it at Sierra. So it helped me.
Yeah, that's pretty cool. So you get your license in 2016, and who do you go with your aunt's brokerage or wherever she's at?
No. My aunt actually lives in Southern California.
Okay.
So I knew a guy at Best Buy, and his wife is in the business, and so he connected me with her, and I interviewed with Intero Real Estate in Rockland.
Okay.
I'm not sure if many people know about Intero, if you've heard of it, but it's
Mm.
really, really big in the Bay Area, and there's quite a few branches out this way too.
So, is that where you're out on? Well, you were out in Rockland in that at that time, or you? It's just that's
Yeah,
how you got connected. And you're like, well, I'm gonna try to make that work.
yeah. I interviewed with Intero, and I like what they had to say, so I took the position there.
And did you go like, did you quit your job and go straight into real estate, or what was your plan, man?
God, I'm trying to remember. Even I think,
I mean, it was
yeah, I think I
2016,
had a
it's a while
couple
ago.
deals. After I got a couple deals under my belt, that's when I quit Best Buy.
Quit Best Buy.
Yeah. So
So you jump in and you get your license, right? You're out here. What's that like initial starting point for you? I mean, it sounds like you got into a couple of deals pretty quick, which isn't super common in the industry, unless you kind of maybe luck out or you just hit like the right time of the market or whatever it is. But
yeah.
you go into this experience. Do you have coaching behind you? Do you go straight into a team? What's that like for you?
No, I didn't go into a team at all. I just went straight into just trying to make it happen myself. I didn't have a ton of deals my first year, but I had a few,
Mm-hmm.
and I was mainly trying to get business through open houses. I was doing a lot of open houses. Probably did like 30 open houses my first year, and I got two deals from open houses my
Mm-hmm.
first year, and then I got one deal from just reaching out to my sphere of influence.
So it's funny. I was just talking to. I have a buddy who got into real estate not too long ago, and he's trying to figure out how to make it work for himself. Right? He's like, I'm gonna try this Feesbo thing. I'm gonna try, expired listings. And I was telling him,
Heard that.
I'm like, look, man. Like, in all honesty, this market's crazy right now. People need help. Like, they don't want. A lot of people don't want to do showings, and it's a pain. It's time consuming. It can be money consuming, but like I always thought that was a really good way to get your foot in the door. And not only that, it's like you need marketing, you need stuff to put on for your social media, you need to find people, you need to meet people, and like what better way to do that? Even if your brokerage isn't doing it, a lot of times if you're diligent with calling other brokerages and talking to people, they're like, yeah, you want you want to do an open house for me on a Wednesday? That's fine with me, man.
Yeah, exactly. That's what I was doing. I was
Hmm.
just reaching out to any listing agent, any open house like house that I saw that would thought would be a good open house, and I would just call the listing agent, and pretty much most people would just say, "Yeah, go ahead." They don't want to do it.
Yeah, no, exactly right. And that's the thing is like, I think, you know, in this market and in really any market, I think if you're brand new, you're coming in, you're looking for opportunities, do everything you can. But I think this is like low hanging fruit, in my opinion, even though I think people feel it's very labor intensive. And I guess in the realm of real estate, it's probably one of the more labor intensive things. You can go in and it's nice because you can go in, you can shoot a walkthrough, you can edit that video out, and now you're putting up marketing for them and you're putting marketing up for yourself and you're doing all of this stuff. So I think that's a good way for if you're a brand new realtor to consider starting to try to get business, and hopefully you have a little bit of money to get out to those and things like that. But I think it's a good way to start. So you're in here your first year. Now you have your loan license, right?
Not at this point.
You don't.
Not at this point. No, I just had my real estate license at that point.
Okay. And so, how long did you have your real estate license before you decided that you're going to get your LO license?
I think it was 2 or 3 years, 2 years maybe.
Okay.
And yeah, so what happened basically was I had been working in real estate. I had five, six, seven deals under my belt at this point, but the money was kind of like drying up.
Mm-hmm.
And I didn't have a lot more deals coming, so I started working a second job again. I think I went back to Best Buy
Mm-hmm.
again, and man, I got tired of that. And then I had a friend offer me a job selling manufactured homes, actually
Okay.
out of West Sacramento at a manufactured home dealership. So I went there. I like got all the licensing for that, which was easy. It's not
Mm-hmm.
hard to get that. It's fairly simple. And then my broker from the loan side. So at Intero they have Capital Direct Lending and Intero in the same building.
Mm-hmm.
The broker for Capital Direct and the broker for Intero, they're husband and wife.
Okay.
So, he knew I was a hard worker. He knew I was really trying to make it in real estate. So I was only gone for like a month, and he called me, and because it was really busy on the loan side
Mm,
back then. I think it was like 2020 or something.
sure.
And he wanted me to come back and work for him and get my loan license and learn that side of the business.
Okay, so let me think about this. 2020. So that I think we probably got in. It sounds like we actually had a very like similar timeline. I think I got my real estate license in 2018 or 2017. It's been a while, I forget. And then I got my loan license in 2020. Yeah, that's right. But I was a processor. I was processing before that. So processing, and then I decided, okay, I'm gonna go and I'm gonna do this. And there was opportunity in our brokerage to kind of step up and take up on a leadership role and things like that. But it sounds like we were like we're doing the same things.
Yeah.
We're in the same area. That's pretty funny. And so yeah, I know. I don't know how it was for you, but for me, essentially, what was happening is we had some builder accounts that were out in the Central Valley, where they were getting, we were their preferred lender, and we were getting, hundreds of pre-approvals a month, and trying to get these people through. And, only so, you can only do so many of these on your own. And so my broker needed help with that. He needed help with the processing. Plus, we had our traditional business because we also have the real estate side. And so, essentially he's like, hey, I know, you've been doing the media stuff for me, and you're doing real estate. And at the time I was working for the Boy Scouts of America. I was a senior district executive with them. And I had this opportunity, and I was kind of like, man, this is kind of scary. Cause I'm sure you felt this, like transitioning into real estate. It's like, this commission only situation. And then the loans, you're like, if you know even a little bit about the market, well, this isn't going to last forever. It's not going to like always be this much volume. And so it can be kind of scary. But essentially for me, I went in to meet with him. I met with them, and he essentially said, hey, this is what's going on. This is the opportunity that I want to provide. And I said, all right, let me call my wife. I called my wife. And I said, what do you think? Is this okay with you? Right. And she said, if that's what you want to do, then that's fine. And then I called my boss and I said, hey, I got to put in my 2 weeks notice. So that was kind of like my transition. And, at the time when he, said, hey, do you want to get involved? How did you first get involved with the lending side? Were you processing?
Yeah. Yep.
Yeah.
I started doing setup first.
Okay.
So it was just like setting up the files, trying to, learning about how to pre-approve a borrower, look at all their income docs and all that stuff.
That's funny. That's the last thing I learned how to do.
Oh, really?
Yeah, that's the last thing. So I essentially, like, I did the middle portion first, right? Where it's like collecting documents and essentially how to upload them into the system. Like, not the first initial upload, but after conditions come back and things like that. And then how to work with the underwriters. That was like the first thing I learned. And that was pretty much just because my broker was in the industry for 20 something years, and he could pretty much do most of the pre-approvals like offhand, So he was like, well, let me handle this, because when you're doing, this as an LO now, right? You need to be exact on pre-approvals, right? It's not an estimate or like just a best guess, right? And so I think liability wise, he might have been a bit concerned, like, hey, I'm just pass these off to you and they're going to be wrong or whatever, which is high probability they could have been, right? And so I did that initial part, and then I learned, like months later, I learned the closing portion. And then the last thing I learned how to do was the pre-approval stuff, because you can't pre-approve without your license anyway. And then I was like, all right, well, now, I'm licensed and I can do everything. So,
yeah.
So you're doing that. What's your guys' volume look like at that time? Like, what are you like super busy? Did you leave your other job, or were you doing all of it?
Yeah, so I was on salary at that point. So I left the manufactured home dealership, and I was just full time there.
Mm-hmm.
I had another processor training me to how to pre-approve and all
Right,
that.
right.
So I was like sitting right next to someone, just watching every single thing that they do, and they were, going into detail
Mm-hmm.
on how to pre-approve borrowers and, take the loan application and all that.
Sure. And what'd your guys' volume look like at that time? Were you
Oh,
pretty busy every day?
I think at that point, so now thinking what I said at 2020, this was before 2020. This was the end of 2018 or 2019 now that I
Okay,
think
yeah.
about it, because
So
thinking how long I've been in the
before the
business.
COVID boom, then
Yeah,
yeah, this was on
exactly.
the
Yeah.
uprise.
Right,
Okay,
exactly. So at that point, we probably had like 50, 60 loans in our pipeline total.
yeah.
And then when, after when the COVID refi boom, we had over 100 at
Yeah, I
that
was gonna
point.
say you got a lot of practice in before you even got to before that boom hit.
Yeah.
And so pretty much, you're doing are you doing real estate too, cuz here's the thing, and I've explained this not super in depth to a lot of people, and I'm going to do a podcast at some point like fully kind of going into the real estate and the home loan side, and but it can be very conflicting to hold both licenses. A lot of lenders and real estate companies won't let you use both.
Yeah.
And depending on, I guess, the way that you do business, it's not always super advantageous for you to, like, if you do lending, to have the real estate license, because the ideal relationship is that you're feeding realtors and they're feeding you, right? I mean, that's a general idea. So did you at that time, are you like, well, I'm going to keep both, I'm going to do both?
I wasn't focused on real estate. I was focused on getting loans.
Hmm.
And, if I had a deal just fall on my lap on the real estate side, if it was a friend of the family or
Sure.
a close friend of mine, then I did it, but I didn't get a lot of them.
Hmm.
So I
Yeah.
wasn't focused on that. It was mainly refis and all that stuff.
Yeah, I think that's the same sort of, I think, transition. Well, I had this conversation for probably 6 months with my broker, right? Because at the time it was like, he's like, you're going to have to choose one or whatever, until I got into this capacity where I was going to be like essentially, help building the business. And so at that time was like, hey, one or the other, decide what you want to do. It'll be beneficial for us to have both in case we need you to jump on something. But that's what we want. And there's just a lot of liability with carrying both, right? And so
Yeah.
eventually I kind of made that decision. I'm like, well, for me, real estate's, is great, except for I work at a really high capacity of like being able to sit in front of a computer and get work done. And
Yeah.
so I was like, well, I like that. I like being able to coach, which is a little harder to do when you're doing real estate yourself. And
Hmm.
so I was like, all right, I'm gonna be a referral agent. That's what I do. So I'm like technically a referral agent, and then I will do like business really only if it's for a friend or a family member, kind of like the same way you did.
Right.
And then I mostly just do our loan side, right? So sounds like we both made the right decision, or well, both made the decision, right? And I think ultimately that's where people end up falling in line, because I don't know if you've experienced this yet, but I've had people who've told me, like other realtors, like, "Oh man, I would totally send you business, except you guys already have a real estate company." And I'm like, either like, they feel like you're competing with them, and I'm like, well, we're not. You still need people to get your loans done, don't you? Like, you still need to close your loans, but there's that perception. I think there's a bit of give and take in the industry.
Yeah.
Hmm.
Yeah, it's a stigma that's out there, unfortunately. It's kind of like insurance agents.
Mm,
We as a loan agent, I refer insurance agents deals all the time, and
right.
I don't, get a lot back from them, but
Mm,
it's because they work with a whole bunch of different loan agents. You know what I
right.
mean? So they can't refer deals to everyone,
Yeah.
and that's just kind of the way it is.
Yeah. No, I totally agree with you.
Yeah.
So you're doing the loan side, and then let's kind of jump a little bit forward, right, from 2018 to, and I assume you're just doing the loan side. Things are going well for you. You're learning how to, master the industry, and then COVID comes, right? What's that look like for you guys?
It was a brief moment of not a lot going on,
Mm-hmm.
and then it just got crazy, you know. Everybody was kind of worried, for a second there. I think
Mm-hmm.
rates trickled up for a little bit,
Mm-hmm.
for a month or two, and then they just started dropping, and then just business just started pouring in at that point.
And you're at this time you're an LO, right?
Yeah.
And do you have people working? Do you have a processor? Do you have a TC? Like, what's your guys' team look like?
No, we had like three processors on staff,
Mm,
including myself.
mm,
And I was doing processing and my own loans at the same time.
mm.
And yeah, no, that's what it looked
I
like.
think, and I've had this, I think I mostly have had this conversation with myself because I don't know, I'm not friends with a lot of people that are in the lending industry, but I do know people, they have the transaction coordinators for them or they have their processors under them. And I understand that like at a certain point, it makes sense to do that. But I think I'm part of these Facebook groups and things like that where people instantly want to jump into having a processor. And I'm like, well, I feel like doing the entire process is what makes you really effective at the
Yeah,
career and
yeah,
being able to, there's obviously it can be very time consuming. It can be somewhat of a frustrating situation. We had a client out of SF who would only mail documents. So you can understand
yeah,
how difficult stuff like that can be, but I just feel like going through the entire process is what makes you effective, and that back and forth with the underwriter and underwriters help you reinforce the knowledge base of what's going on with Freddie and Fannie Mac and what are those regulations. And for us, we work with every major lender in the country. Well, we'll talk, maybe we could talk about this a little bit, the fight going on between Rocket and UWM, but we work with every major lender, and so you learn how to use these different platforms, and they're not all equal and stuff like that. So it's a, I think, unique experience, but I don't know. I guess you don't, if you don't want to do that part of the job, you pay someone $300 to $500 to do it. But to me, it feels like that's an integral part of the job, at least for the first couple years, until you really, really know what's going on. I mean, how do you
right.
feel about that?
Well, I feel like a lot of people, they get their license and they've never done processing before. So
Mm,
they really, a lot of LOs will get their license and they really don't know what the heck's going on, you know
mm-hmm,
what I mean? So for you, I'm sure it's the same. I'm really happy that I learned processing first
mm-hmm,
because then when I got my license, I felt like I was a really good LO,
mm-hmm,
And at that point, because I knew what to do and I had such a process set in place, I don't feel like I need a processor. I'd rather be hands-on on the loan. I know what's going on at every step of the way. When the approval comes in, I can go over the conditions, call the borrower. There's not a middleman in the
right.
way, messing up my file.
Mm-hmm.
So that's how I like to do things. I like to just process my own files. I'm sure if I got to a point where I had too many, then I might need some help. And which I did, I definitely did get help at some points when I got
Mm-hmm.
too busy. But for the most part, I did everything myself.
Yeah, it's just, I don't know. It just for me, I don't know if it's like an old school thing, but yeah, I like to be hands on with what's going on, and I like to be knowledgeable when I'm talking to the clients. And the other thing is like I think it almost feels like processing. Well, the loan is a little more like art. There's a little finesse to it, right? Because
Oh yeah,
even though they try to make everything black and white, it's not. There's a lot of gray
exactly.
in the way working with underwriters works. And so, there's certain auditing things like on asset statements and things like that where, if they've never done it, then I'm like, well, we just lost 2 days. And my big thing since I started is like I want to master a 15-day close, right? And I pretty much have done that. Where I'm like, okay, if I work with my client and we start from the pre qualification and I have everything in place, I can almost guarantee, provided I can't control appraisers, I can't control inspectors, and turn times for underwriting. I mean, but for the most part, if you work with them enough, you can kind of say, okay, like I'll navigate this. But if there's someone else in the mix, the more people in the mix, the more chance there is for that mess up, right? And that
Exactly.
delay. And I hate to be the reason that anything is ever delayed, right? I always tell my realtors that I partner with, I say, hey, if there's ever a delay, it shouldn't be you and it shouldn't be me. No real estate, no loans, right? It's somewhere else. It's their fault. We don't want it to fall back on us, and let's be as diligent as possible in making sure that's what
Right.
happens.
Exactly.
So you're doing, the LO side, and I assume, your situation's similar to mine where you have realtor partners outside of, are in the, real estate brokerage that you're with. How many people are you partnered with, or what's that partnership look like for you guys?
So I mean, at this point, most of the business was actually coming from my broker.
Mm,
He probably had 10 different realtor partners
mm.
maybe. Um, and it was mainly busy though with refis. We had probably at that in 2021, we probably were doing like 40% purchases, 60% refis.
Okay.
So the majority was refis.
Yeah, it's interesting because I mean, obviously, like we were doing refis, but I would say that honestly, like 80% of our business was purchase. You know,
Yeah,
we
working with a builder, I'm sure that's
Yeah,
how it is with you
working with the
guys.
builder, and then the way that our real estate brokerage is set up. I mean, we're a small boutique brokerage. We work, like any really small boutique brokerage, we're relationship based. And so
Yeah.
it's really, people who are looking at investment properties, people who are looking to, buy first homes, and then our builder accounts. And yeah, we were getting refis in, but I wasn't doing a ton of them, honestly. I was mostly doing purchases. And when I do talk to people, they always assume like, oh yeah, that must have been a good time. You're doing all those refinances, and I'm like, yeah, it would have been, but we weren't doing a ton of them. And I know, just for some knowledge base for people, you're hearing right now, it's October in 2022, and if you haven't heard, a lot of lending companies are closing. They're shutting their doors. They're firing 50% of their staff, if not more. And that's because they leveraged their business on the refinances, right? And granted, maybe some businesses have been through this before and they knew exactly what was going on, and they knew, well, this is just the way you do business in this industry. But it's a scary time to be in this industry. And that's kind of one of the reasons I was like, this guy is out here and he's doing what needs to be done, and he's making the connections and the moves. As far as I can tell, I mean, I don't know who you are personally, but getting, you're from what you've sent me, it's professional. From what you're sending out, it's knowledgeable. And this is a scary time. Like, are you guys worried at all? Or I know you guys must be following what's going on. I know for me, it's a little bit of a different situation because I have a different capacity within our company. But I can't say that, it's not a little frightening to see, what's going to happen.
Yeah, no, it definitely is. I think everyone in the industry is feeling it right now, even real estate agents, not just loan
Mm,
officers. A lot of people who are busy and on the real estate side are slowing down too. So, you know,
mhm.
it's definitely in the back of your mind.
Yeah, so we've been saying, since essentially June, we've been talking about rates aggressively. We've been talking about it, and we're like, well, our prediction was we were going to end the year between 8 and 10%. That's where we thought they were going to land. So they're at a little over 7 right now, I think, maybe 7.1, maybe a little below that. Feds
Yep.
meet again next month. They meet again in December. So it'll be interesting to see what happens. I think the plot charts are essentially saying we're going to see continued increases. And real estate trends, as far as I can tell and what I'm seeing, there hasn't been a super substantial drop depending on, we're, based in the Sacramento area. So I've seen some luxury drop 30%, some, general real estate 15, 20. Some, some people are being super aggressive. They're dropping 50, 100 grand off these properties. Maybe that's the entire equity they built in the last 2 years, but I don't think it's fully come, down to where it was. And so, we're kind of thinking maybe April or May is when we're going to see most of that equity shrink out from where it was. And then maybe rate adjustments in a positive direction in July, hopefully. What do you guys think?
I honestly, I don't know. I don't know when they're going to decrease rates. It's hard to guess.
Hmm.
Um, I hope it's within a year.
Yeah, yeah, exactly. I, you know,
But I mean,
I think, right, because the thing is like, we have to look at what's going on here. I mean, Sacramento is unique because it was promoted nationally as the number one market in the country, right? So that promotion alone, on top of the vast amount of Bay Area money that filters into Sacramento because it's an easier commutable city. And it's really, outside of being in the Bay Area, it's the only real like city you can live in and commute to the Bay Area, right? You can live in the Central Valley, but the Central Valley is not, it doesn't have the same appeal necessarily. And so I think Sacramento was unique in the way that it had all this publicity. It had, all of these relocations, and it shot up significantly. And granted, I think there's still a ton of value here. I mean, they're building, thousands of homes off that corridor from Anatolia going into Folsom. And so I think there's still a lot of value here, but I think we'll see when you look at the numbers overall in the next 6 months, Sacramento is going to have to be one of the largest drops in the country just by the pure fact that it was so bolstered, right?
Right. Yeah, I know. I read an article that was, I think San Diego had the biggest slowdown, and Sacramento was up there too, as far as, houses sitting on the market, not selling.
Yeah, it's an interesting thing too. And, I know I just, maybe it was a couple months ago, I was reading this article about the highest median price of homes in California was in San Jose, which I get it, right? It's right next to, Stanford and Palo Alto, and you got that money there. I was surprised because I always, in my head, I thought it was either LA, San Diego, or SF. So that was interesting to see, but it's just like everything that money that's right in the Bay is coming this direction, and it's raising the prices out here. And then we're raising the prices in the Central Valley. And then that kind of goes out, it trickles out that way. And so I think, it's the way that the market adjusts with these price drops, because the appraisals have to go through, then they have to record, and it takes a little while for all of those numbers to come through. And then that gradually starts that price reduction. And that's ultimately, I think the feds are trying to combat inflation, right? And so it's going to take 6 months, I think, at least for those price drops to reflect, and for it to be, this is really a feeling thing for people, and for people to see those numbers and then feel a little more comfortable with getting back into the market. And then there's always an uptick right before summer, right?
Yeah. Yeah. It's going to take time for sellers to realize, okay, these prices aren't getting my house sold.
Yeah.
And however long that takes, maybe the next 3 to 6 months, like you said, that's when they're going to start reducing the price.
Yeah, exactly. So where you guys, I mean, I always, it's interesting. I'm in Rotary. And so I just went to a Rotary Club meeting yesterday, visiting a club because I'm looking for a new club because I moved into a different area. And my name tag says Realty and Home Loans on it. And so it's always funny. People are like, oh, well, where do you work? Where do you do business? Things like that. And I'm like, well, Realty, granted, I mostly do work near where I live, but I mean, I'll drive pretty much an hour anywhere. But lending is a little bit different, and people don't fully grasp this concept that literally like doesn't matter if you're in LA, like your loan being done right here in Sacramento makes no difference. Right? It's no benefit for, for me to be, and unless you're one of those people that want to see that person face to face, or, you want to personally hand them your documents, which is very far and in between people. So how far are you guys stretching out? Are you guys licensed in other states, or, what's your guys' scenario?
No, right now, actually, we're just licensed in California.
Okay.
So we do business all over. We don't do a lot of business far from Northern California, but we've done deals in Los Angeles, and I just did a deal for my aunt in Victorville, California. San Jose.
Yeah.
We did. Geez, when you said that the prices, we did one in San Jose, a purchase, and I think it was only like 800 square foot house, sold for like almost 900,000. 2021. I was like, oh my God. I mean, the prices out there were ridiculous.
Yeah, man. I often wonder, granted, it's a different world when you have money, right? And so it's interesting. I don't talk about money very much with people on these podcasts. Maybe just because I think the stigma of talking about money in your profession, it feels grimy a bit, and people are like, oh, that's the only reason they're doing real estate. They want to be millionaires. And I'm like, yeah, I'm a millionaire, man. No, I'm like you guys, right? I make okay money, but I'm not a millionaire. But
Yeah.
it's interesting because, you essentially have this choice of real estate or home loans. And I've explained this before, but essentially when you do real estate, you get paid off in California, you get paid off the purchase price. And when you do loans, you get paid off of the loan amount, which is always lower than the purchase price. Right now, that could be depending on the sort of loan we're gonna talk about a couple loans today. That could be 3% less than what the purchase price is, or it could be 200,000 less, depending on how much money you don't really know, right? And so, well, you do when you're doing the deal, but ultimately, it's an interesting thing because and depending on your brokerage, typically you get paid 1% is typical in the market, maybe a little above, maybe a little below, depending on where you work and the volume that you do. Where in real estate in California, the average, cost per side is 2.5%, right? Maybe 3, maybe 2, but that's pretty typical. So they're making significantly more money, right? So what's the value of being a loan officer? Well, volume, right? I mean, that's the idea of volume. So it's scary where it's like, well, you got to get more deals in. It's more critical in our industry that you have to get higher volume of deals in, because of that purely, right? Have you felt that pressure for yourself?
Oh yeah, definitely.
Mm-hmm.
Yeah.
So you're doing the loans, you're going through kind of the COVID period and things are like pretty good for you guys. Hopefully you put some of that money away and you're feeling comfortable right now because things have slowed down a bit. What's it looking like for you guys right now?
So yeah, in 2021, was doing good and was able to buy a house that year, so that was great.
Nice.
Which I'm
Congrats.
very happy I bought a house then,
Mm-hmm.
and yeah, I was able to save some money, so we're doing okay.
Good. And
Yeah.
how's the brokerage doing right now? I know you guys are obviously reaching out, but and obviously I'm not saying like, don't be like, oh, we're struggling, we need some people, but ultimately, do you guys have strategy in place? What's your kind of, and maybe even just you personally, if you don't want to talk about the brokerage, but personally, what's the strategy for the next, 6 months look like for you?
Yeah, so for me, it's mainly marketing right now. It's
Mm-hmm.
reaching out to realtors. It's going to the Placer County Association of Realtor meetings. It's doing a weekly email. I do a weekly email every week about the market, and maybe doing some cold calls here and there, and
Mm-hmm.
just reaching out to people, reaching out to my sphere and anybody that I can.
So what do I don't want to get into the actual loan offerings you have right now, but you know, what you'll hear a lot, and I think what people want to hear is, should I buy right now? Right? What are you advising people? And I know there's no straightforward answer for this because it really depends. And this is what I tell everybody, it really depends on your situation. And people hate to hear that. But the truth
Mhm.
is, right? I mean, I don't know what your financial situation is. I don't know what your credit score is. I don't know any of this stuff that lets us know if this is a good time for you or not, right? But I will kind of say, like, well, this is what's going on in the market. So maybe this would be a good time for you if you were this type of person. How's that conversation go for you?
To me, it's if I don't, you can't force someone into buying a house.
Mm-hmm.
If they're gonna want to buy a house, then they're gonna want to buy a house.
Mm-hmm.
I don't ever try and talk to someone into buying a house. If they can afford the house and they can get approved and they feel like they're financially comfortable to be able to make that payment, then that's their choice, and
Sure.
I'm here to help them through that process. I won't talk them out of it either.
Mm-hmm.
It's always going to be good to own real estate in the long run.
Sure.
Values have always gone up over time, even though maybe you buy right now and it goes down for a little bit. Eventually, it's going to go back up.
Yeah.
So,
Well, it's
it just
interesting.
depends on the person. On the person.
Right. I don't know if you've done your continuing education this year. If you're a loan officer, You're required to do, I think, 8 hours of continuing education every year to
Yeah.
keep your license active. And the company that I'm going through right now is called Mortgage Educator. I like them like 65%. I don't think they're great, but the content they put out is pretty good quality. And so they just did the elective section talks about a lot about millennials, and it talks about their purchasing power. It talks about the trends we should see in the next 10 to 15 years for that. And they talk about how millennials right now are the highest gross earnings out of any generation ever, right? Even with the inflation and all of that. But they are the least financially educated out of any generation either, which is really interesting when you
Yeah.
consider how much information is out there between YouTube, Google, TikTok, Instagram, and
Yeah.
not, and granted, not everybody is giving great advice, but for me, I feel like every other post on the stuff that I follow is financial stuff, and maybe that's just my algorithm, but it feels like it's so accessible. Yet, I do run into a lot of people that, I'm 33, and I run into a lot of people around my age, maybe a little younger, maybe a little bit older, who they really don't know what's going on. They maybe have some struggles with how to manage their money. They don't know where to put their money. And I don't know if it has something to do with I feel like we're almost kind of reverting back to the 60s where people just don't trust the government. They don't trust banks. They don't trust like anybody to do stuff with their money. I'm not really sure. I mean, have you run into this?
Um, I would say a lot of my friends
Mm,
I could put into that category. I think for me, I was lucky to where getting into real estate, I think you kind of go into that world,
mm,
of learning about finances and loans as well, especially. I think that really got me interested in learning about finances and everything like that. But I would agree that a lot of people just may not be interested in even knowing about it. And, if they didn't buy a house 5 years ago, they're kind of just like, I can't afford it at this point.
right.
So, um, yeah, I mean, I would agree with you there.
Yeah, the narrative right now that I'm hearing the most of is that this generation coming up is going to be the first generation that can't afford to buy homes on their own, right? Like in the masses, right? Obviously, there's been plenty of people who have needed help buying homes in the past, but in masses. And it's the general idea that the economy is not going to get any cheaper. The housing prices, especially in California, there'll be fluctuation, but they're pretty much going to continue to. And that's, I think, one of the benefits of owning is we're an equity state. So the likelihood that your home will continue to build equity over the next 20, 30 years is good. But that does make it harder for entry, right? So
Yeah.
unless there's some sort of massive adjustment in earnings, it's going to be extremely difficult for people to get in. And not only that, because of 2008 and before that, and the law adjustments that have happened in lending, it's that much more difficult to get a loan now because there's so many more regulations in place than. And I get this all the time, and I'm sure you do as well when you deal with people who bought homes 20 years ago, and they're like, man, when I bought a home 20 years ago, it was nothing, right? I like barely gave anything. I was like, why do you need this? Why do you need that? I never had to give that before. And I'm like, it's a different time.
Yeah. Yeah. Definitely.
So let's do this. I know we're almost, we're getting close to that time, but I definitely wanted to talk about some of these programs you have because they caught my eye. We don't do a ton of, non-QM stuff. And I saw that you guys are pushing some of that out as well as some, other really interesting programs. Now, I don't want to put you on the spot, and if you don't have everything in front of you, feel free to just let me know. But I do want to, yeah, perfect. I do, yeah. You send me over this flyer, Capital Direct Lending. I assume this is on your website as well, probably.
This specific flyer is not on our website, but we will be putting these different programs on there in a different manner.
Okay. And your website's probably like what, capitaldirectlending.com or something?
No, cdlmtg.com.
All right, there you go. So,
Yep.
if you guys want to take a look at that, check out their website, and we'll have it in the bottom section as well with the description. But do want to kind of go over some of these just because they're interesting. I know that we always, we prefer to put people into the best loans. I think everybody who's doing this ethically feels that way, right? And you start from the best and you kind of work your way down. But it's an interesting thing. And I was just having this discussion with a potential borrower that we have, and we were talking about a 5-1 ARM versus FHA fixed. And we were talking about the price differences and all of this stuff. And, there's some credit issues that we're working out. And I was explaining to him why ARMs exist and what the benefit are and who can benefit this. And you learn about this when you're, going through your education portion to become a loan officer. They talk about ARMs distinctly, like how are they beneficial? Because typically they cost a lot. There's, they are adjustable rate mortgages, so they can adjust in the as the market goes up and down, and that can be really scary for people. But who benefits for these? They talk about people who are going to be potential high earners, like lawyers or doctors, things like that, who right now maybe they're just getting out of a residency, they're not making a ton of money, but in the next 5 years they will be, so they can adjust with the market and they'll be fine, right? Or if you're in a position where you're like, I'm going to get a raise in a couple years and I can buy myself into a new loan or something like that, right? That's a general idea. So you guys have some interesting stuff going on here. Why don't we start out? You have the Cal HEFA 10% forgivable grant. What's going on with that?
Yeah, so that's going to be a program for first time home buyers. There's a conventional or a FHA option. It's actually a state program through California, and it offers up to 10% forgivable grant towards not only their down payment, but towards their closing costs as well.
Oh, that's pretty good.
So they could come in with very little money.
Mm-hmm. Yeah, and then that's a good one too. And I've talked about Cal HEFA. We did a podcast where we slightly mentioned the Bank of America program that's rolling out across the country. Yes. And we did try to explain that, on these sort of programs, you have to understand that you are typically limited to median county earnings, right? You can only make so much money to qualify. And you typically have to buy in a certain area. But that, that's not for every program. And so, I'm not sure if it is for this one, but I know, we do some stuff with Cal HEFA. I haven't personally done it, but I know that, my broker has and things like that. So you guys have, traditional FHA, you have the conventional bank statement. I know a lot of people are asking about these bank statement loans. You guys have 12, 24 months. What do we have going on there?
We actually do that and the DSCR loan quite a bit. Those are our top two non-QM programs that we do the most of. Mm-hmm. Bank statements are going to be for people who, they write too much off on their taxes. Maybe they have a lot of expenses, or, they're playing the tax game and they just don't show a lot of income mm-hmm. on their tax return. So we can approve borrowers based on how many monthly deposits they have on their bank statements on 12 or 24 months giving you better rates.
Right. And this is actually a funny thing, because realtors are notorious at this, right? At taking full advantage of the tax codes, for everything. And so as a realtor, let's say you make $100,000, but you might, because you run your own business, you might, like, for instance, myself, I've been in media for a long time. I own a bunch of cameras, I own lenses, I own, hard drives and computers and all of this stuff. And it's like, you need these write-offs. So it's an interesting ebb and flow. And we work with a lot of people that are self-employed as well. And so it's sometimes, people can they don't understand. They're like, well, I technically make all this money, but I'm like, yeah, but it's not technically accounted for because you're writing it off against, business earnings and things like that. And so stuff like that can be really beneficial for, people who are making money, but maybe it's just not, it's not like a W-2 where it's straightforward earnings.
Exactly.
Yep.
That's what it's there for.
All right. Private money. Are you guys a private lender?
And we're not a private lender ourselves. We broker private money deals.
Okay. So you guys got a
Yeah.
couple partners that you guys are with that'll run these deals for you guys. It's actually
Yeah.
so this is, not every, like we do ourselves, like we have projects that we have going on, but we don't personally do this where we have private money. But I do have people that I know who are, wholesalers as well as flippers. And, they're always looking for hard money, private money to work with.
Yeah. No, we
So
do quite a bit of them actually.
it's good to have that,
Yeah.
that connection.
They're more for investment deals, but we can find them for primary purchases as well.
So this 2-1 buy down is actually interesting because that's actually coming a lot on the Facebook groups. People are like, what is this 2-1 buy down? Do you want to tell us about that?
Yeah. No, do you guys offer that program?
No, we don't.
Okay. Yeah, I mean it's a great program. It's came out 2-3 months ago. I actually just saved a deal by getting this program because I was doing a purchase for a family member actually, down in Santa Ana, and when he got his initial loan estimate, he'd been looking for a while, and rates just kept going up, and the transaction happened fast, so I locked in the deal, sent him his loan estimate, and he was like payment shock right away,
Right.
So he wanted to back out, and so I worked with him and the realtor and talked to him about the 2-1 buy down, which lowers his payment for the first 2 years and gives him some time to work into that payment, save money, and hopefully in 2 years rates are low enough to where he can refi into a lower rate again anyways.
Right. So I do want to go over a couple of things just for listeners. I know we sometimes get in the habit of throwing acronyms out. And you guys don't know what those are. So a qualified mortgage and a non-qualified mortgage is what we're talking about, right? Some of these are qualified mortgage, and the most basic understanding of this is a qualified mortgage is a loan program that is designed for you to be able to repay it, right? It's called the ability to repay. And there's certain parameters around it, like if no more than 30 years and, it has to be fixed rate and things like that. Right. And non-qualified mortgage, that doesn't mean they're bad mortgages. Doesn't mean they're bad loans. It just means that they don't fall into this categorization of them being, straightforward, I guess is the best way to put it. I don't know if you have another way you want to put that, but, and so some of these are they're considered non-qualified mortgages. And one of the things that makes a qualified mortgage are county limits on properties. So a good example of this, you guys have a jumbo loan. Jumbo loans are technically considered non-qualified mortgages because they're above county limits, right? So let's say $500,000 is the qualified mortgage amount for Sacramento County, which it's actually more than that. But if you went above that, you would have to get a jumbo loan. And now that jumbo loan is considered a non-qualified mortgage. And that's just an example, right? So if you guys are wondering, well, what are they talking about? What's qualified, what's not qualified? Is it good or bad? It doesn't necessarily mean one's better than the other. It does, you just have to understand that they do fall into different categories, and you have to be your loan officer, Aaron can walk you through the benefit of that, right?
Yeah. They typically don't follow under Fannie Mae and Freddie Mac guidelines, and they typically have a little bit higher of interest rates. But other than that, a lot of times they can be very similar to a qualified mortgage.
Right, exactly. And the other distinction, right? He's asking, hey, do you guys have this program? So the understanding that you have to have is that we are a mediary between you and lenders, right? Our job is to essentially, it's broker the deal. So our job is to help you guys qualify for a home loan by navigating the open market, finding the best deal for you, the best lender for you, and then getting you through the underwriting process which is a whole nother thing to navigate, where if you were to do this on your own, you would probably have a little bit of difficulty, right? So that's our expertise. We're the middleman for this. And so when he asked, do you have these programs? The reason like the 2-1 buy down, because we haven't had anybody that's come in that we've had to use it for. Now, if we have to go out and we have to find it, we have lenders that probably offer that we can work it with. But it sounds like you guys have already been lining stuff up to accommodate what's going on in the market. And now you guys are out marketing, advertising it, right?
Yeah. Yeah. We do, our 2-1 buy downs mainly through United Wholesale Mortgage.
Perfect. I'm jumping on right now. I want to look at the text message you sent, because that was initially what caught my eye. And I was reading through it and I was like, man, you guys are offering a lot of stuff. It was a really long text as well. And I had just got it while I was at the gym. So I was like, it's like, who the hell is texting me this long text, man? Yeah. So you guys had the bank statement, the 5-1 arms, the commercial financing. What is this CHENOA down payment assistance? No required to be the first time home buyer or be an 80, what is this, Eden area income?
Yeah. Okay. So yeah, that program I'm pretty excited about, because it's very similar to CalHFA, but it's a national program. So you can get it in any. I think there's only 2 states that you can't get the program in. It's going to be another down payment assistance program. It's not going to be a 10% grant. So it's going to be a down payment assistance. There's different options with it. I think the main one that they do is actually a second mortgage that covers the down payment, but it has a payment with it. And there's not a very high, or there's not a low income limit. You can actually make 160% of the area median income instead of 80%. So you can make double the amount of income with however many borrowers are going on the transaction. So it's another good first time, or that's the other thing. You don't have to be a first time home buyer either.
Right. All right. Well, you guys have a lot of great options here. You're out there, you're doing the work, and that's what we love to hear. We're coming toward the end of the podcast. I did want to give you the opportunity, if there's anything that you wanted to make sure that they knew about yourself or the business, anything like that. Maybe if you had some social media or something like that you wanted to throw out, I wanted to make sure I gave you that opportunity.
Oh, I appreciate that. Yeah. If you want to follow me, I'm on Instagram. It's just at Loans with Aaron, simple. And if you have any questions, just reach out.
And you guys you're primarily in the Sacramento area?
Yeah, our office is based out of Rockland, so we mainly work Northern California, Sacramento area.
Perfect. I mean, he's licensed in California, so if you guys want to do any work in California, feel free to reach out. But primarily, if you want to meet him in person and buy him a coffee, you can do so in the greater Sacramento area or Northern California. I want to thank you again, man, for being on. I know that your time is valuable, and I know everybody appreciates your insight. A lot of great stuff. You guys are doing some cool stuff, and, hopefully we'll get to do some business together someday.
Yeah, absolutely. Thanks for having me on.
Yep, absolutely. So as always, guys, this is the Hard Money Show, where we talk about real estate, home loans, and media. You guys have a great night.